Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Matt D. Fothery, Lee Boyd, and Rob Beller.
Hey, podcast world. We are here with a very, very, very special edition, something we've never done before, but I don't think we've ever had kind of an opportunity like this before. We are here to talk about the question, how does the Lemonade IPO affect or influence the insurance and insurtech ecosystem at large? So we went out to our network of really, really, really smart people and asked a bunch of them if they would give us a really quick comment of their thoughts and opinions of the Lemonade IPO and what it means.
There's so much to talk about. We've heard so many people who had positive. We heard some people who had some negative about it. We have some people who talk about a wait and see. Let's just see what actually happens. So we thought, well, let's get some of the smartest minds that we know who this really could impact. Let's get them on the podcast and let's just ask them, what do you think?
Right. We chose people from different points and places around the ecosystem, carriers, insurtechs, influencers, et cetera, and asked them to be with us. And we kept each interview very short. And so I think you'll enjoy hearing what they have to say. And so here are the people who are joining us today, not in this order, but we have Rob Galbraith, who is the author of The End of Insurance as We Know It. And Rob works on the carrier side, but has written extensively about InsureTech and is certainly an influencer within it. We have Tim Attia, the CEO and co-founder of Slice Labs, and we all know about Slice Labs and have heard about it, and they're doing just tremendous things in our space. And we recently had an episode that we did with Tim, and he commented on this as well. We have Mark Brading, who has been with us before on an episode from Strategy Meets Action, but he came with us to give the kind of the view from a consultancy standpoint and where he sits. And then we had on an old friend of ours, Dan Moore, who's the Chief Operating Officer at QBE North America, and he provided his perspective.
And along with all of those, we're going to have Dan Reed. Dan is the Managing Director at AmFam Ventures. He's going to bring the perspective of an investor and really let us know what he thinks about it. We also have an exciting guest, Assaf, CEO and co-founder of Hippo Insurance. I think Hippo and Lemonade a lot of times get lumped into the same bucket. And a lot of people said, well, Hippo might be next. So we're going to get to talk to Assaf and what he thinks. Caribou Honig is joining us, chairman and co-founder of InsureTech Connect. Always a delight to get him. He's a guy who has his finger on the pulse of the insurtech industry, and it'll be exciting to hear what he says. Jenn Byrne, she's the CEO of Quesnay, and she is going to bring the perspective of the startup community and really an all-around perspective. So excited to have her on.
So instead of us talking any more about this, I'm sure you all want to hear what these people have to say about the Lemonade IPO. So why don't we just get to that, Lee?
I think that's a wonderful idea, Rob.
So without further ado, here are our series of interviews that we had with a number of important, interesting people about the Lemonade IPO and what it means to the insurance and insurtech ecosystem. Hey, everybody. We're here with our guest, Dan Reed, Managing Director at American Family Ventures, coming to us from Wisconsin today. Thanks for coming back and giving us a minute, Dan.
Thanks, Rob. Thanks for having me back.
It's a pleasure. We were just talking real quickly about where you are, but everybody knows where they are today. They're probably at home.
That's right.
Is that where you are?
Yep. It's been 3 months now, 4 months, something like that. I'd be off by a day or so, and now I'm off by multiple days. I think it's Friday and it's actually Tuesday, and it's just lost all sense of bearing here.
Right. It's kind of what it's like to be a retired person. I don't know what day it is. Whatever.
Sure. If a retired person had 10 hours of Zoom calls a day, that would be what it's like.
Oh, well, and I'm sure most do.
Right.
So anyway, let's just jump in real quick and get your thoughts on the Lemonade IPO. You're in a particularly interesting perch I mean, you run a venture organization, a VC organization. We're interested on what your thoughts are of what the Lemonade IPO means or signals to the insurance and insurtech ecosystem, and what's your take on that?
Yeah, well, it is the talk of the moment for sure at the moment, and I would say that it would be in a more interesting spot to comment on it if we were investors in Lemonade. So kudos to the people who had a chance to invest and to the Lemonade team. It's just an amazing story. When I reflect on what does it mean to our space, I think about there appears to be this disconnect, maybe even a strong disconnect between how legacy carriers talk about Lemonade and how the public markets are valuing their story. And I think that disconnect, where the legacy carriers are a bit more skeptical about the valuation of a company trading at something 30 plus times gross written premium, and the fact that that's exactly what they're doing out in the public market suggests that there is this public appetite and an ongoing demand for insurance innovation. And to me, that is the most powerful signal that I'm seeing here, is that Lemonade was among these first movers to tell a different story to the market about what insurance could be, about how engaging with an insurance carrier could feel, and it seems to be really paying off for them. I think primarily it's obvious that it's still a growth story. I mean, it's still centered around what they intend to do, but how their story is going to play out in coming years. I think even more so than a typical stock. But I think the most powerful positive attribute that Lemonade can talk about is that they're acquiring the next generation of insurance customers, which is more or less synonymous with the digital first customer, which is a growing segment of the population. And I think that's very much worth paying attention to for everyone involved in this insurance market.
We spoke with another friend from a carrier, and his take was their competitive moat is not that significant, particularly for more aggressive carriers like AmFam, as an example, or some of the others who have really taken a lead position in the insurtech take-up world. Do you agree with that maybe they can be caught on a product level?
There's a whole class of companies that have a similar profile to Lemonade that I would expect all of their boards are probably talking about, should we move more quickly toward an IPO right now? But
sure.
You think about a Root or Hippo or Clearcover or Kin or Next. I mean, the list keeps growing. I think that if these companies, these kind of digital first companies that do have this resonance with the digital first customer, if they're able to stay focused on serving that large and growing segment of the insurance market and really align their cost structure, their product approach to serving that customer better than anyone else, I think that's a winning story for them. Because if you think about legacy companies, they have tremendous positive things going for them around their scale benefits, the capital base that they have, but they are also serving a broader segment of the market, which implies a broader set of engagements, and with that comes a cost model that is tough to unwind
right
over time. And so it's hard to say. I mean, if Lemonade were to say, as I think they're on record as saying that they plan to go kind of up market into the homeowners market itself and extend out of the renters market, they may find themselves tempted to broaden their customer lens. And in doing so, it may negatively affect their cost model and erode some of the advantage that they may have already. But I don't know. I can't really say. So it's, it could go either way. I think the future is more digital engagement. And if you start with that, then you don't have to unwind a more comprehensive engagement model to serve all of your legacy customers.
You must think that's the disadvantage that the incumbents have.
Yeah, I think it's the challenge that they have. I wouldn't characterize it exclusively as a disadvantage, because having millions of customers is its own advantage, right? And having the surplus that comes with that. I think that the interesting thing that could really happen here is, I mean, it's such a clear example of an IPO going well, at least in what we are now at day 4 or something of their right. That it's got to be extremely tempting for all these other companies to say, well, we should go the IPO route. Investors have made money, but I actually think the more powerful approach would be to align yourself with a carrier that has a need for transformation and really, a really strong balance sheet that can help support the growth for the next decade or two.
Well, it's certainly a fascinating time, and this is an interesting wrinkle or distraction or opportunity or all of the above that Lemonade has discovered. We really appreciate your time and really appreciate your insights once again. Thanks for making time for us.
Yeah, thanks for having me.
Well, hi, everybody. We have Assaf with us today, founder and CEO of Hippo. Very excited to have you on. Welcome, Assaf.
Thanks for having me.
Well, we are doing this series today talking about the Lemonade IPO and what it means for the world of InsureTech and insurance. And we'll just start off with, what is your thought on this whole Lemonade IPO? What's going through your mind?
Firstly, I'm very excited by this event. I think it's a maturization of the industry. It's a path to build franchise businesses in InsureTech, which I think is really, really important. It definitely shows the pent-up demand that institutional investors and customers have for these kind of businesses. So I think it's a really, really positive. And it's also a good testament for the really cool millennial renters brand that Lemonade were able to build.
Yeah. I have to ask you this because we've actually done a couple of these already today. And a lot of people lump Hippo and Lemonade, saying, when is Hippo going to go? If Lemonade went, what about Hippo? What's going on? What do you say to that when people say, well, what about you? What are y'all going to do?
I would be lying if I wouldn't say that it's something that didn't pop on our radar, and half of my investors called us to discuss this. But I think what's important is to realize that going public it's not the end. It's a mean, and it's another way. It's a fundraising event. It also raises basically the profile of the company. It's an important component, but it's not. The goal of Hippo and Hippo's investors is not to go public. Going public might be one of the things that we're going to do to keep on raising money to bring more visibility to the brand and something like that. It's something that we've been thinking about for quite a long time. We're always prepping the company to have the option that if we want to go public, we would have that. I am not 100% certain that we are fully ready to be a public company as Hippo is now. There's several things that I want to take mark before doing it, but it's something that is definitely front and center for us.
What do you think about the other insurtechs out there? Do you think that we'll see a race to go public? Do you think that that'll expedite people's plans?
I think it would probably expedite the plans, and the banks would push for it as well. So I think if someone thought is going to go public in 24, 36 months, it's probably going to shorten the time span. But it's really, really important to also understand there's a certain process with going public. It usually takes 9, 12 months from when you're feeling that you're ready. It's not something that you turn on and off really, really fast. You need to make a prospectus. There's a lot of stuff that needs to happen. And who knows what the market is going to be like in 9 to 12 months time span. I'm not sure how much it's going to affect that. But you did see Allstate announced a big acquisition.
Yes.
KKR has done some acquisitions. I think there's going to be a bit more consolidation play in the market. If anything, during COVID, most of the insurance industry has proved to be quite resilient. Mm-hmm. And I think it was beneficial for a lot of companies in the auto space and stuff in the P&C. So I do think there's going to be some interesting moves that would nudge forward more because of this IPO.
Yeah, I would agree with you. I think that between that and the Allstate move, a lot of people are thinking, wow, there's a lot of life in the insurance world, maybe more than we originally thought, even though a lot of people thought that there was a lot. I have to ask you, whenever you were on our podcast, we talked about Israel-based companies and founders, and Daniel is from there, you as well are from there. I read an article about, is this going to have investors looking closer at those founders who are from Israel? What do you think about that?
I think investors and then media usually like to bucket everything together into kind of uniform theme. Uh-huh. The Israel entrepreneurial environment and ecosystem is very vibrant. There's a lot of VCs, there's a lot of public companies. It's been something that was known for quite a while. Guy from Next Insurance is also Israeli. There's no lack of good Israeli companies for a while. That's a good brand for Israeli entrepreneurs. It's just there. It's not a new thing.
Yeah.
There's just a slightly higher concentration in the field of insurtech.
What did you say to your investors when they called you, obviously excited? How did you respond to their, I'm sure, enthusiasm to maybe move forward in that direction?
That nothing changed for Hippo. We've been having our own plan for the last 5 years. We keep on executing on that. Companies that are resilient, strong, and executing and bringing a lot of value to consumers are going to be worth a lot of money. And exogenous events should not impact or change our thoughts. So we're happy to discuss with them. We're happy to see and learn from that. But we'll, steady as she goes. We keep on doing what we're doing.
So you'd say the same thing to other startups, insurtech startups that are out there working and growing. Just work your plan.
I think that's entrepreneurship is such a roller coaster. The most important thing you can do is focus. So I really strongly urge people to focus and do what they do best and keep on executing and keep on and focusing on their customers, and then keep on focusing on the employees, and then shareholder value is going to pop out of that. It's not different, it's consistent, and that's what I would do. I wouldn't put any blindfolds over my eyes and not look at what's going on in the market, but this is not short-term kind of moves.
Well, it really looks as though you're out there making a lot of news yourself. I've seen Hippo in great context, within the LinkedIn feeds and news records. So, well, Assaf, we want to thank you so much for being on today and giving us your insight and thoughts on this. And we look forward to the next time we talk to you.
Just say when. Always a pleasure.
Thanks so much.
Thanks, Assaf.
Thanks, guys.
We're here with Mark Brading today from Strategy Meets Action, and Mark is an alumni of our podcast and been with us before, and we have him with us today to go over the question about what the Lemonade IPO means to the insurtech ecosystem, and Mark is particularly well positioned to answer that. So we'll just put it right out to you, Mark. Give us your thoughts on that.
Well, thanks, Rob. Well, there's no question that this IPO is important for the industry. Lemonade overall has been a catalyst for change for the insurance industry. In fact, just a couple of months ago, we released a research report on what we call our top 50 insurtechs in P&C, and of course, Lemonade was on that list. I think there's a wide range of opinion out there in the marketplace, which is probably why you're doing this series. There are some that have the opinion that Lemonade's going to grow dramatically and it warrants this very high valuation, and the IPO just validated all that. And there's others that think it's all hype and the insurance results are never going to live up to this hype and all the marketing and the valuations that they have. So these two divergent views are, kind of making it interesting conversation.
Where do you weigh in? What's your thought?
Well, I've always thought that this is a long play. I mean, starting an insurance carrier, you're going to be profitable within a couple of years, right? Mm-hmm. It's really difficult to build a rapidly growing, profitable insurance company in a short period of time just because of the nature of that business. So, I guess I'm not at one of the extremes. I'm somewhere in the middle. I think they certainly have, as I said, been a catalyst. Their business model has been interesting. There are a lot of people watching them. And I think just the jury is out. They still have a long way to go before they prove to me and to others that they're actually going to disrupt the insurance industry. Because, in the scheme of the global insurance industry or just the U.S. insurance industry, they're still very small, right? And have had a very minor financial impact on the industry overall.
Do you think that the excitement is over the fact that they're first to market of sorts, in that they're first to the IPO world out of the whole insurtech group of startups and going concerns that are out there in the insurtech world?
Yeah, it's a good question. I mean, this is in the midst of a very unusual, volatile time. So I don't know if this is a predictor of what's going to happen with future insurtech IPOs. I think Lemonade is quite unique because, first of all, they started only in renters, and they were never going to disrupt the industry just focusing on renters
Of
insurance,
course.
right?
Of course.
And obviously their plan has been to expand into different lines of business, which they're doing with homeowners and with liability over in Europe, and expand into different geographies, which they're now in Germany and the Netherlands. So they're trying to build out that growth potential. But do they warrant that huge valuation? I don't know. It's it's you have to be a very long play investor to put your money in it, I think.
Working with many carriers, how you do at high levels inside of those carriers, how do you think the carrier is looking at this? Do they see this as threatening, that now they have an even better capitalized competitor, or some other way?
I don't think most property casualty insurers see them as threatening. They see them as interesting. They're trying to learn lessons, what's their business model, how are they approaching things. And of course, Lemonade has pivoted a couple of times. They started with the whole peer-to-peer idea and quickly moved away from that to, more focus on social advocacy, the whole give back program and all that kind of thing. But they've really kind of migrated into being more of a traditional type carrier. So I think a lot of insurers are interested watching them, but they don't really feel threatened. I mean, I'll throw this out. Insurers do feel threatened with, say, Root, who's grown a lot more rapidly, in the auto space, now moving into homeowners themselves and across different states. And so I think they're a threat. If I were a P&C auto insurer, I don't think Lemonade's there yet where any insurers are shaking in their boots that they're going to really truly disrupt.
Do you think that Hippo is maybe a better example of somebody that they're keeping their eye more closely on?
Absolutely. Yeah. I personally think Hippo is amazing. The way that they've built out their ecosystem and continued to expand their offerings and their capability. And now with the acquisition, that puts them in a position to be an underwriter, they definitely, and they've grown rapidly as well. They're well capitalized. So I think that they're interesting. And maybe for Lemonade, it's just because they started in renters, which is a smaller line. And, for most insurers, it's a minor line. So we'll see. I think the next 2 years are going to tell for Lemonade, right? If they're able to build out their homeowners business and it really does start to grow and they start to get their combined ratios down and are moving towards profitability, then I think they're a threat. But I don't think they're there yet.
So I know that you work with a lot of insurtechs also directly and talk to them and consult with them. What's going on? How do you think the startup community and the insurtech, the actual insurtech company community views this? I mean, obviously, they're probably elated.
Well, yeah, because, to credit of Lemonade's founders, they have a great vision. They have a great marketing engine. They've really built an amazing, strong brand. They built a company that's growing, and they've gotten all these funding rounds and now an amazingly successful IPO. So of course, every insurtech founder is looking at this and saying, that's what I want to do, right? I don't want to say it this way, but in some ways, like the success of the company, the financial success down the road is secondary, right? Because at least, gosh, if you could have a successful IPO like this, that's amazing. So I think certainly the whole insurtech community is applauding this, right? No matter where they are in the ecosystem.
Sure. Well, it's the first chapter. We'll see what the next ones have to hold. We really thank you for being with us, and thanks for sharing your thoughts.
Thanks, Rob. Appreciate it.
Hey, everybody. We have Tim Attia, CEO and co-founder of Slice Labs, with us, and we're here to pose him the question about the Lemonade IPO. And that question is what are your thoughts on how the Lemonade IPO and what's happened with it thus far affect the insurtech ecosystem?
Well, besides jealousy and envy,
that's very forthcoming of you.
I think it's very positive. I don't think anybody ever gives enough sort of insight into how hard it is to do what they did. It's really, really hard, and especially when some people are not necessarily hoping you're going to be successful. and are always sort of digging in and are not looking at all of the good things. I think they executed, I like to say, flawlessly. And I know that means in the startup world, you make mistakes along the way. And I think it's very, very positive because it's a sign that it is possible to do something that's impactful in the insurance industry. And I think anything they've done or any of the startups have done is going to be good for the industry. Anything that moves the industry forward, and I think it does help move the industry forward. If not creating debate, I think it's great.
What do you mean what they did was really hard? You mean just start and get to this point?
Sure. Yeah, come from outside the industry, try to change things, try to push the envelope, try to do new things. Yeah, everything they've done, from their marketing, their delivery, the fit of their product, the quality of their products, how they execute it. I think it helps move the industry forward and show that it is possible to do something new.
Well, great. Thanks for your insights. Appreciate it.
No problem.
Hey, we are here with a very, very, very special guest that has joined us all the way from St. Louis, Missouri, Dan Moore, Chief Operating Officer of QBE North America. Thanks for being with us, Dan.
Thanks, guys. Appreciate the opportunity.
We love having you, and you're an alumni of our podcast, and we're thrilled to have you back on to ask you the question about Lemonade and what's happened in the past week and get your thoughts on how the Lemonade IPO has affected the insurance or insurtech ecosystem. What do you got there?
Yeah, sure. So first off, I think anytime anything good happens in the industry, you got to celebrate that. And so kudos to the Lemonade folks for pulling off a successful IPO. Obviously, that's not easy to do. And so there's a lot of work that goes behind that. I think it signals a lot of interesting things for the insurance industry. One, I think it does signal that there's a lot of demand, if you will, for fintech, insurtech types of opportunities. And there's a recognition amongst a lot of the investor base that there's opportunity to disrupt aspects or elements of the insurance value chain, right? And I think that's evidenced by a lot of the activity you see. I think there's probably a little bit as well of the, a little bit of that might probably come off of the lack of IPOs recently and a little bit of the hype that kind of surrounds some of these disruptive type technologies, and maybe some of that pent up emotion is built into that price. But either way, it's I think recognition by the market that there's a lot of things there. I think it's in terms of other types of insurtech, fintechs who are looking to go out. Obviously, this is one of the first pure plays that has gone out. Some of the others having gone out before, not quite as pure, more in the distribution or other parts of the value chain as opposed to the whole chain itself. And so I think it continues to demonstrate probably some opportunity for those folks who are looking to continue to get some capital via the markets to continue their journey on building out an insurtech fintech view. I think the pricing probably for me dictates that there's and I think that others have articulated this as well, that it probably presents a go big or fail kind of binary outcome for the folks at Lemonade. I think the one interesting piece that I've seen out there and probably holds true is it gives them some capital to do some interesting things with, and potentially, stock is currency for other acquisitions. And to the extent that that they're smart about how they deploy those resources, they may find themselves successful in ways that they didn't originally intend, i.e., outside of the pure IA enhanced or IA oriented insurance market. Because at the end of the day, I mean, personal lines, renters, the AI quoting and the AI, the limited AI claims aspects are interesting. But those are things that Lemonade has probably spurred a lot of the incumbents to focus on over the last.
Sure. It's not a USP.
Yeah, right. It's not, and I think and I think kudos to Lemonade for kind of pressing that issue. I mean, there's things on the conversation at insurance companies around the globe that weren't there before. Whether that's some of the AI supported activities, or whether that's things like behavioral economics. I mean, some of the work that has been done by those folks is spurred thinking in ways that others hadn't considered as much before. So kudos in that regard. But I think more broadly, it probably for Lemonade itself, I think the challenge still is to how do you become profitable? How do you grow the base? You're still a pretty small fish in a big pond,
right?
And the incumbents, the barrier for incumbents to replicate some of what you're doing is lower than I think some people may realize. That said, I think it's exciting for what it represents for the broader market and for insurtech, fintech innovations along the way. But I think it's going to be real hard to overcome the advantage of incumbencies.
Yeah, you bring up an interesting point, and that is their market share. And I don't know what it is offhand, but obviously it's very, very small, certainly in the U.S. And I know they're stretching their legs over in Europe as well. So do you think that this raises the eyebrow or makes people on the carrier side, on the incumbent carrier side, scratch their head or think, oh, maybe I should look at this way or that way? Or do you think, other than the excitement of it, it really doesn't mean much to the entrenched incumbent market?
I think their impact to the incumbent market has already been made. If I'm honest, I think and you see that when you go talk to any number of incumbents about what they're working on within their organizations. They're working on AI enhanced underwriting, AI enhanced triage. They're looking at straight through processing on claims. I mean, those are lots of things that I think were in part being worked on before Lemonade came out, but certainly accelerated and reemphasized and reinvested in by lots of incumbents with the advent of Lemonade on the scene, right? And so I don't know that the IPO itself does much to incumbents other than kind of continue to spur them forward in their role to try to figure this thing out. So.
And do you see a lot of that in the incumbent world, that they're trying to either catch up or even lead in the technology focused carrier side?
Well, I think there's always a desire and an effort on the part of the carriers and the incumbents to find ways to be more efficient and effective at delivering value for their customers, right? And I think one of the things that you have to ask yourself is, if you were to line up all of the costs that you have as an organization, which ones would be the ones that your customer would actually be willing to pay for, right? And when you think about the cost that exist in some of the incumbent organizations, the reality is some of the frictional costs of doing business are things that don't necessarily your customers might not be anxious to pay for. And in that scenario, there's definitely a lot of work that's been done in that space. And technology like AI has the potential to help remove some of that frictional cost and to improve the efficiency and the effectiveness in a way that adds value for customers, right? I mean, having an effectively triaged underwriting submission allows an underwriter to either pass it through more expeditiously if it's in their sweet spot, or dive in and be a little more creative at finding a solution if it's perhaps a little bit more hairy. But that kind of technology allows for removing some of that frictional cost that otherwise would be borne by humans, similar in a claims environment, right?
Sure.
Having the ability to take perhaps some of the, and I think in Lemonade's case, this is no different. I mean, they've got the classic black puffy coat example that they kind of went out the gate with, but the reality is simple claims probably don't need, a lot of extra effort. And, to the extent that we can get those expeditiously, adjudicated in an effective and proper way, allows us to spend time with claims professionals on claims that are, more complex, large loss fires,
Correct.
Coastal weather events. Those kinds of claims are not going to be solved by an AI bot, right?
Right.
And we'll still need claims expertise. But freeing folks up from dealing with black puffy coats allows you to focus on the areas that the greater expertise.
Okay, and with that, I think we'll put on our black puffy coats and say thanks for joining us, and we appreciate your insights and forward to having you on again.
Always look forward to talking to you guys again.
Thanks. We have Caribou Honig with us, the co-founder and chairman of InsureTech Connect, among other things. I hear you have a new gig that you're doing as well.
Yeah, that's exactly right. Sort of have been a special advisor for the last 2 years to a really interesting boutique fund focused on future of work kind of investments and elevating my role there to be a partner.
Well, congratulations. That's exciting. So we were just talking about the unique perch that you occupy in the InsureTech world. And so we want to ask you the question of what your thoughts are on what the Lemonade IPO and the resulting excitement about it means to the insurance and InsureTech ecosystem. And wherever you want to go with that, please do.
Look, it's really the talk of the town in the InsureTech community, right? I mean, it's a fairly big deal for anyone who's on the investment side or the building a startup side, even if you're one of the incumbents and trying to figure out if this is real or just hype. I don't know if it answers that question entirely, but it's certainly a shot in the arm for it being real. Look, number one, I think it validates the thesis, right? That real equity value can be created in this InsureTech thing, right? And it can be done in years, not decades. It's not a solitary data point, right? It's easy to sort of write off just a single event, a single company. But now, this on top of what was it back in August, September, the announcement about Prudential buying Assurant IQ, for a multi-billion-dollar price tag, you're starting to get enough dots to connect here to say, yeah, there's a real trend line here that multi-billion-dollar companies are being built in InsureTech in years, not decades. It's also, I think, shouldn't be ignored that maybe you can do so in a way that's not as capital inefficient as people were nervous about, right? And with my VC hat on, right, when you're writing a check, you're always worried about, okay, is there going to be another few rounds, and are they going to be massively diluting? And as an entrepreneur, you got to be worried about that too. And I think a couple more billionaires are being minted here in InsureTech, right? And that's good. Maybe one of the long range implications of this for the industry will be maybe some of these InsureTech billionaires will sprinkle some angel capital around to the next generation too. That would be good. That would be healthy for the ecosystem. And I think the third thing is that it's showing the public markets, right, weren't completely spooked by a short-term unprofitability. Like we thought maybe WeWork was this sort of wild turning point in what the public markets were willing to tolerate. And, I'm not suggesting that in any way that Lemonade and WeWork are, cut from the same cloth, but, a hyper growth story plus a plan that's really credible, right? Or at least interesting, right? To get to a great profitable place and a great team, right? And I think everyone can basically agree on that point, that the Lemonade team is really a great team.
Sure. No question.
Yeah. And that combination of growth, an interesting plan, and the great team, that's value, right? That's real value that the public markets are willing to call. So I think those three things come together, and then finally, now those folks have a couple $100 million more in their war chest and a currency, like a really well-valued, good multiple currency. I gotta believe it starts to catalyze, right, some at least smaller acquisitions. If I'm those folks, right, I'm starting to look around. Okay, how do I've got this customer franchise and a tech foundation. Now, what other products can I start to build or buy, right, to start offering, right? They've announced things like pet insurance, and they're, I think, talking about the build for that. But now that they've got the currency and the capital, probably want to look at buying as well.
Do you think that being an InsureTech, coming from that category, was important to the markets? Do you think that there's a comment about how the markets feel about the coming InsureTech wave, that there was a message in the Lemonade IPO?
Well, look, there's clearly an important part of their narrative, of their story, right? Which is we kind of can start with a clean slate, right? We can figure out what we want our processes to look like. We can figure out what we want our tech stack to look like to enable those processes. It allows us to move faster. It allows us to design the products and the interaction experience, both that we want for the customer's sake and for the sake of our operational efficiency. Right? That's the narrative, which I think distinguishes a customer-facing and InsureTech from an incumbent that's kind of hamstrung by legacy process, legacy technology, and in some cases, legacy, culture as well. Now, I'm not in a position to assert whether that narrative is 100% true or 80% true or 60% true in the case of Lemonade, but that is the important narrative that's at play here.
What do you think it says about digital first carriers and in the marketplace, direct to consumer carriers? There's several of them that we could mention. Do you think this is the market saying we believe in you?
I think the market is saying we believe that there's huge upside here. We believe that something massive and important can be built. Right? I always think of equity as having an option value to it. Right? Now, that's more true at the early stage as a venture investor than as a public market investor. But I think that clearly the public markets aren't saying, oh yeah, Lemonade, good company, and clearly they're capped at a couple $2 billion of outcome, right? Because then why would you invest if you're already right at the ceiling? So the public markets are saying, we think there's a chance that this Lemonade thing, they don't fulfill their destiny, their vision is something that can't quite get there. And counterbalancing that, there's some sort of massive upside that's even more massive than the few $1 billion market cap that they've already achieved. So I still look at Lemonade. It's still by public company standards, a fairly young company, right? As something that is in a sense validated now, that while of course there's downside risk, there's also almost by definition still a lot of possible upside. And whether it's Lemonade or any of the many other customer-facing full stack InsureTechs out there that have not yet gone public, I'm more convinced than ever that we're going to see a number of them be successful, both in terms of their equity value and in terms of building real, profitable, sustainable, enduring businesses.
I wanted to ask you about that as we come to a close, and that is you have a great position that you sit in as leading one of the leaders of InsureTech Connect, which does just that. It connects you with a lot of InsureTechs. What are you hearing from the community other than giddiness about what this means and what it bodes?
Well, look, there's clearly active debate, right? Very active debate around, is this valuation the right valuation? Does it make sense? Does the underlying business support it? And Lemonade has, in a sense, always been polarizing on exactly those questions. And oddly enough, going public, I don't think has actually changed that. Arguably, going public has increased how polarized people feel about it. But I do think that this is kind of the sort of declaration, right? If Assurance IQ was not enough, this certainly is the declaration that InsureTech matters. It's here.
And with that, we'll say thanks. What a great way to end. And congratulations on your new work. And we look forward to talking to you again soon.
Always my pleasure.
We are here with Jenn Byrne. Jenn is a alumni of our podcast, as well as a friend and a co-host on our special edition that we did with Quesnay in the not too distant past. And we have Jenn on with us today to talk about the Lemonade IPO from her unique perch and perspective. And so we'll just get right to it, Jenn, and ask you, what are your thoughts? What are your insights about what the Lemonade IPO means to the insurance and insurtech ecosystem?
Well, thanks for having me back. Great to be sitting with you guys again. And yeah, I think it's a terrific question. I would say, on the one hand, it's super exciting for the industry to see one of very few tech IPOs this year be in the category of insurtech. So I think that's exciting for the market, and hopefully will portend other future IPOs for other insurtechs in the not too distant future. And it's exciting too because it's technology providing service to a fairly underserved market, being the younger generation that's really digitally focused. And so it's sort of validating that, yes, we need automation. Yes, we need technology, not only to become more efficient, but to communicate with the younger, more digitally savvy customers than we've been doing so to date. And on the other hand, I would say it's sort of fascinating, though, that, the stock went from, $29 up to $69 when it's a company that has been losing money quite a bit over the last several years. And in 2019, I believe they lost over $100 million. And with the narrow margins that they have, you just wonder, why did the market get so excited about the IPO? Is it because of the future growth? Because they're going to move into, upselling and cross-selling other products beyond renters and home insurance? Or is it just because there's a dearth of IPOs and tech IPOs this year? So it was exciting for investors to put their money somewhere, since a lot of the market is overbought and expensive right now. So it'll be interesting to see if that momentum stays within the market, and if they're able to truly grow and improve margins. But when you charge $5 a month for renters insurance and you start to pay out claims, as you all know, those it can be difficult unit economics. So I definitely think exciting, but also, I guess, cautiously optimistic, and hopefully they can grow and get into other states and geographies with other product lines like pet and some of the other areas of insurance they've talked about.
Your company, Quesnay, runs competitions. Most notably to us is your female founder competition. Have you heard from some of your contest participants about this? I'm wondering what the startup community is thinking. I mean, obviously they're probably very excited, but what are you talking about with that group of people?
I think the consensus is definitely, excitement, right? Because there just haven't been very many, and this is a new category of tech, and it's being validated not only from an IPO perspective, but the fact that there are so many customers that need to be served, right, in a digital form. I think that's super exciting. If I'm an entrepreneur with a tech solution for insurance, I'm wondering, how else can I better serve millennials, digital native customers, and this sort of validates that. And on the other hand, losing $100 million and having a lovely opportunity to go public is kind of interesting too. So I wonder too if some startups might think, well, maybe I don't need to focus so much on margin and unit economics, because I can still, with the right investors backing this and the growth story, still perform well and have more capital to continue to grow. The consistent worry, as we've talked about before, though, is that most insurtechs and technology startups that are run by women do not attract the amount of capital from institutional investors, right? So they don't get the capital that a Lemonade obtained from SoftBank and Sequoia and others. And so are there other opportunities to get enough funding into underserved startups? And that's really part of what we're doing, is saying, how can we help you scale up? How can we get you access to capital in different forms? Maybe it's not venture capital, but how can we create, I guess, more opportunities for more startups, not just only unicorns who attract, the large institutional investors. So I think there's that concern still, obviously, because the numbers are not moving in the VC landscape as of yet.
Are you hearing from your community a range of thoughts, plus both positive and negative, on the Lemonade IPO?
For sure. Those from a deep history in insurance in the core industry, so not tech folks, but the actual leaders in the industry. Most of what I've heard pre-IPO and now at the IPO is that they are skeptical of the issue of losses, unit economics, and how much can you grow? How much will customer acquisition and retention continue to cost? And so is it really a profitable business? Could it be a profitable business ever? And so I'd say those from the traditional business of insurance are a little bit perplexed, I would say. And those that are thinking more of it as tech forward, they will, I think, look at this more as a classic tech IPO. Whether you're Uber or others,
right?
They were also losing money. And so I think if you're coming from a tech background, you're more comfortable with that notion of scaling losses, just build your customer base and then figure out the profitability, versus coming from insurance where you can't even compare. Allstate had almost $5 billion of profit in 2019, as opposed to Lemonade, where they lost $108 million in 2019.
Any final thoughts that you have on this from where you sit?
Yeah, I guess I would say remain optimistic that there are a lot more of the InsureTech IPOs to come. It's a very large industry, trillions of dollars. There's a lot of room for digitization and improvement of customer experience. And I think customers are looking for that. So I do think that we should continue to be optimistic and fund more startups, and also just try to serve customers in new ways, in the ways that they want. So that part is very exciting to see Lemonade really achieve that.
Cool. And we'll look forward to the day when one of your female founders is standing up there on that podium, ringing the bell.
I will as well, and I will make sure we are on the show with you and that we celebrate.
You better. That's what matters to us. Okay. Thanks for being with us, Jenn. We appreciate your time.
Thanks so much.
Hey, everybody. We have a leader and a thinker in the InsureTech area, Mr. Rob Galbraith, with us, who is an author who wrote The End of Insurance as We Know It, and has spent a lot of time and energy in the InsureTech space. So we're going to jump right in, Rob, and ask you the question: how do you think the Lemonade IPO and what's happened with it affects, or what does it mean to the InsureTech ecosystem?
Yeah, thanks for having me on this question, Rob and Lee. It's great to be with you guys. So I actually have really mixed feelings about it. On the one hand, I definitely think it's something to celebrate. And I know there's been a lot of celebrations and words of support for Lemonade over the past week. It's tremendous, right? So in their less than 5-year journey, just to go from an idea to an IPO, I think is really incredible.
Right.
And so I think for InsureTech in general, it's a really positive thing, right? Just to show kind of that you can build up, that you can have an exit, that you can have an influence, that's of this size and this magnitude within this time span. So I think it's good overall. Having said that, I put a little asterisk by that and say that I'm actually concerned. And obviously, it's done tremendous since its launch, right? It had an awesome first day. We're recording this on the second day of trading. It's done even more. So I have not personally bought stock yet. It's a little too, now I'm definitely not going to buy it now that it's gone up so much. But, I think I just worry about, at its core, right? Lemonade is, homeowners and renters insurance, and, they've had great growth, but still a tiny fraction of the market share. And so I just don't know what the full outlook is for Lemonade specifically as a company going forward. There's a lot of InsureTechs out there, a lot of interesting platforms I think that will actually scale more than Lemonade will. And so Lemonade looks a little bit more like a traditional insurance company. And so at some point, it's going to have to be evaluated as a traditional insurance company. And so if they don't do anything to either license their platform, go into other lines such as, personal auto or commercial or whatnot, I actually don't think the lofty valuations that it's getting right now are going to be justified going forward. And I do think that the stock will take a bit of a hit. And to the extent, if and when that were to happen, I think there's going to be a big piling on of the naysayers, right? And, see, we told you so, blah, blah, blah. And again, how investors rate Lemonade as a company, whether they think it's a good investment or a bad investment based on the financials of the company projected going forward vis-a-vis whatever the stock price happens to be on any given day, right? That shouldn't be a commentary on InsureTech in general. And I'm a little bit worried that it will be. So if the stock starts coming back to earth, that I think you're going to see a lot of people piling on and a lot of naysayers. And it actually could be a bad thing for some startups. So I definitely think if you're an InsureTech startup founder, right, you should be celebrating, but you should want Lemonade to do well, not just in this first week, but long term. And over time, it's a sample set of one essentially right now, right? So obviously there's a ton of great companies, a ton of great startups. Some will do well, some won't. Some will be in the middle and have solid businesses, but not be spectacular. But, Lemonade, however you feel about them, they've done a tremendous job of marketing. They've done a tremendous job of getting that brand recognition and carving out, right?
Yes.
A space for themselves. And so I just worry that, again, whether you love Lemonade or whether you hate them, that they are very polarizing. And so that everyone is going to kind of take, again, how the stock performs for Lemonade and then kind of pivot and, again, either pump up or tear down InsureTech overall, right? I call it a movement really, just based on that. So yeah, like I'm excited. I'm very happy for those guys, but I have a little bit of concern about what it's going to mean going forward.
Do you think it lifts all the boats in the tide for InsureTech from InsureTechs that are working like Lemonade, that are, direct to consumer plays, all the way over to tools that are out there like Cape Analytics or who knows what? Do you think that all valuations kind of increase as a result of this, that the market is saying that?
I think TBD on that. I think definitely based on the first 2 days of the share price, it just going up. I think we're almost 3 to 4 times kind of what the IPO price was. So, if that were to continue or to hold, then yes. But I do worry that to the extent that it comes back down or falls, and I think the other part that's really tough to know is what's going to go on with the coronavirus and COVID. I think Lemonade was wise to hit this particular window, right? Because the stock market has really come back over the last 3 months, but I would worry about a prolonged recession. I'd worry about stock market valuations, which are looking very frothy at this point. If you kind of do a forward PE standpoint, and some people say, well, you can ignore that, right? The economy will recover or not. But so I think in the short term it will. So if your IPO window is in the next month or two, it's probably a good thing. But I don't know that will be the lasting over time. So, and I worry that again, if the stock gets beat down, then that actually could shave off for some valuations. So I think it's too early to make that statement about rising tide lifting all boats.
Well, listen, we appreciate your thoughts in a few minutes, and we look forward to talking to you again soon. Thanks for sharing your know-how and knowledge with us.
Absolutely. Thanks for having me on, guys. And it is a big day. It is a big moment. And so I am excited for what it means for InsureTech in general. And I do think there's a positive story here to celebrate. Thanks, guys.
You got it. Thanks, Rob.
Well, we'd like to thank all of our guests for being on today. It was wonderful getting to talk to all of them and learning about their perspective and their thoughts on this Lemonade IPO. I'm excited about the future of InsureTech and what it holds.
And we'd like your thoughts as well. So if you have an idea or a thought or input or feedback, please let us know. You can contact us through FNOinsurtech.com, which is our website. And we're always interested in what you have to say and interested in you subscribing to our podcast and being a listener. And so until the next time, we'll say
goodbye, everybody.